Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options US Market Update. In the last update we talked about how basically over the last month the market hadn't given us much direction because of lack of a follow-through day, bouncing around back and forth between a major point of support and resistance. Well, that changed on Friday. So let's take a look at the charts. Before we get to the charts, don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately upon when we post one of these videos. It's helpful and we appreciate it. At the time of this recording, it is 11:30 on Sunday evening, and congratulations to the Tampa Bay Buccaneers and Tom Brady on their Super Bowl victory. Pretty amazing stuff. So right now the futures are up 16, so a little bit of a bias to the upside. As I said in the intro, we've been moving back and forth. If you watched any of these videos lately, you know about this 381 level, you know about the zigzag, I've already drawn it, but the reason we keep talking about it is because it's still relevant. So over the past month, we broke above it, we broke below it, but we never had a confirmation day, a follow-through day, the second day that allows you to have some sort of a semblance of the next directional move. We've talked about the two possibilities, that we come back, test this previous 61.8% extension level before moving to the 161.8% extension, or we just run right to the 161.8% extension. That's basically our two choices. Well, as you can see on Friday, we did have a follow-through day following the break on Thursday. Thursday's break was key because it closed at a new high. The follow-through on Friday, it counts as a follow-through day, but if we come down here and look at the volume, you would have liked to have seen something probably a little bit stronger from the volume standpoint. It was a tick up from Thursday's volume, but it didn't get anywhere close to being average volume. Maybe that changes on Monday, we'll have to wait and see. But when you're looking for the confirmation, quite often the initial move is on lower volume, and then people realize, oh, here we go, we better come in. And you can imagine that in this scenario, with this battle back and forth between the longs and the shorts, if we do start to create some separation from that 381 level, then the shorts will have to cover, and that could propel the market up to that 161.8% level, and would reflect a bit higher volume. But price to volume action is always something that bears watching. All right, taking a look at the dollar. We continue in that zigzag that we talked about 2 recordings ago. I noted it was there. We updated it in the last one, and you can see we are almost to the 100% extension there. So we had 56% corrective move right in there in that 50 to 61.8% fib level. That creates an expectation of a 100% extension. We're almost there. Then we'll see if there's any possibility based on our confirming indicators for a chance of an extended move, or if that's going to be it at this point in time. So when you look at the dollar, you're obviously going to want to look at interest rates too. In the last recording, we talked about how the Elliott Wave triangle formation had basically unfolded textbook to the Elliott Wave rules, where we had the break from the triangle, you come back and retrace the break. Now we're moving to the upside. We have a doji here on Friday. So let's take a look at the 10-day moving average, see if we're getting a little bit overbought, tiny bit, but more importantly, we're at resistance here from the previous wave 3. So it does look like interest rates are going to run up, continue to move to the upside. Perhaps we pause a little bit here, get a little closer to the 10-day moving average, or let it catch up and consolidate with this little area of resistance from the previous 3. Then we look over at the 30-year, and we have the same type of scenario, except no resistance in the way. The 30-year is just powering forward, and we've already broken past the previous 3 high. Looking at the moving averages here, again, slight separation, not a whole lot. So let's take a look at the DMI here, and you can see the DMI is very strong. So good support here from our confirming indicators for a continued move higher in the 30-year, so the long bond. And then if we look at the DMI on the 10-year, that looks pretty good too. So it looks like interest rates are going to continue to the upside. That could then lend some support for the dollar to perhaps have an extended run up to the 161.8% level. Thought I would update you on the cannabis ETF. In the last recording, we talked about how we were starting to break away from that 10-day moving average. Well, since then, we've broken even further. But now we have a couple of issues. We've got a gap here, and we have pretty decent separation from the 10-day moving average. So getting a little bit overbought in the space. We had mentioned that as a place to consider looking for investing throughout the rest of the year with the new administration, etc. But boy, we've taken off to the upside, and now you can see even with the ADX, we're a bit overbought, so we could get a little bit of a rest here, perhaps even a bit of a corrective move before looking to move back to the upside. Another area I wanted to show you, again continuing on with themes for investment ideas for this coming year, is value stocks. So we looked at the consumer sector with the XLY, and now we're adding in value along with the cannabis ETF. So we're giving you a lot of ideas, but here we have a little bit of a gap to the upside on Friday as well. So maybe we're getting a little bit overbought, especially when we're going to need to try to take out that recent wave 5 high. So that means we'd have an extended 5 wave. When we look for that to see if there's any sort of a possibility, or to see what the possibility is to break that level and go to an extended wave 5, we rely on our confirming indicators. Where you can see on the positive directional indicator, buyers are taking control. They are stepping in. The ADX is a bit more lagging. The two directional indicators are far more responsive to the short-term movements of the market, so they give us a little bit of a leading move in, but you want to see that ADX at least start to curl up. Perhaps it's trying to do that, but we need a little bit more support out of the ADX for a convincing setup to break to that high, but something to watch for in the coming days. Looking at the metals, people always ask about these. Silver, we had this big update here with the Robinhood short squeeze attempt, the Reddit guys, if you will. That failed, so we moved back down. And if we look here, you can see that with that move, that did create a 5-wave pattern. But it's a little bit of an aberration when it's only one day. So still look back to the fact that prior to that, we didn't have a qualified wave 5 pattern. So I'm still looking at this major area here, kind of forget that whole thing that occurred. We benefited from it because of our long position that we had. We were able to take off on that spike, but still looking at this and trying to build here for an expected breakout. We are getting a little bit of an ascending triangle here. Clearly we have support resistance at 25, and we're building a set of higher lows here. So pretty nice ascending triangle, and we'll see which direction silver breaks out from here. Looking at gold, gold's just not performing as well as silver. One positive, however, is we came down here and tested these lows from November, so we got into that area, and now we're breaking back to the upside. But we, aside from, again, the Elliott wave rules that we've talked about, where you come back and you retrace the breakout move, we've continued to move to the downside. In addition to that support there in November, there was a little bit of support in this area right through here. So kind of the 170, 168 level here on gold. Gold needs to catch a bid here to turn around and try to catch up with silver. I've talked about this in the past, that historically gold's been the leader, silver's been the trailer. Now it's the other way around. Silver is the leader, and so we'll see if gold turns around and gets its act together. Looking at the VIX once again, well, there you go. There's the breakout move. Talked about this with triangles. There's your breakout and the retracement of the breakout move. So we're right back to the point of the triangle. Again, classic stuff. Doesn't matter whether you're talking about the VIX, an ETF, an individual stock. These Elliott wave Fibonacci rules work. So now we're back down here to the support right around 20. And if we break that, then we begin to start looking for, as I've mentioned in the past, potentially filling this gap and then maybe coming all the way down into this area once again around the 12 level. That would be supportive if the market does break from here and head up towards that 420 level without the test of 61.8 or a completed test all the way down to 61.8. So at this point in time, we trust the fact that we've had a confirmation follow through day. So the expectation at this point in time is now we continue up towards that 161.8% level. Hope you've had a great weekend. Back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.